Nigeria has the largest population and the biggest economy in Africa, third host economy for foreign direct investment in Africa, behind Egypt and Ethiopia. The country is among the most promising poles of growth in the continent and attracts numerous investors in the sector of hydrocarbon, energy, construction, and others. Amid political tension, high inflationary pressure, and scarcity of foreign exchange, foreign investors' inflow in the stock market of the Nigerian Exchange Limited dropped to 53.7 billion naira in the first quarter of 2023 from 128.91 billion naira reported in Q1 of 2022. The NGX latest report titled Domestic and Foreign Portfolio Participation in Equities Trading also discloses that foreign investors' outflow decreased to 35.59 billion naira in Q1 of 2023 when compared to 73.58 billion naira in Q1 of 2022. The report revealed that domestic investors dominate the stock market, controlling 87.87% transactions, while foreign investors stood at 10.13%. Let's understand what is limiting the country's FDI. And I'm being joined by a professor of accounting from Now University in Abuja, Professor Ofili Ogodioha. Prof, it's good to see you. Good afternoon, Prof. Prof, if you can hear me, let me ask you my first question. What do you think is responsible for this drop that we continue to see with regards to foreign direct investment into the country? What do you think is responsible for this?
Okay, good afternoon. This is a very important and topical issue bordering on the economy of this great nation. Foreign direct investment is one of the keys used to boost economy and to unlock inactive economic activities. In Nigeria, foreign direct investment is dwindling as a result of many factors. But because of the time period of this discussion, we are going to discuss on the key factors that affect foreign direct investment in this country. One is the insecurity. Any investor would like to invest in an environment where there is security of lives and investments. If you are sure or you can see from your business analysis or from your business plan that investing in such a climate or an environment will not give you what you need in terms of security of your lives and, of course, the security of your investment, you will not do that. And this is what is affecting Nigerian investment sector, not only foreign investment. Before any investor invests in any climate, the first thing he does is to do the business analysis of that country, which will go into his business plan. We call it feasibility studies. And these feasibility studies will reveal the gains of operating in that environment and also the risk of operating in that environment. If you compare the gains and the risk of operating a business in Nigeria, the risk is higher than the gain. And this affects foreign direct investment. Then you look at another key sector. This is power. Power drives economy. Power drives businesses. Power drives commerce. Epileptic power in Nigeria is affecting every sector of the economy, not only foreign direct investment or even local investment. It is affecting everything. Without power, companies or either manufacturing or any operating sector spends between 20 to 25% of its operation cost on power generation. That 20 or 25% of operation cost is enough for a profit of a company for a year, but they consume it on power. So, if you look at this, then you look at another key sector, which is basic infrastructure. And on this basic infrastructure, where it affects mostly business, is on transport sector. Any good or a product manufactured in Kano cannot be easily be distributed to Nigerians in Port Harcourt, in Enugu, in Lagos or Ibadan so easily. Why? Because the transport sector is almost dead. We leave transport sector to just anybody, anyhow. There's no rail transport. In most countries, goods are hauled or transported from rail on barges down to any sector of the economy where it is needed for consumption or for commercial purpose. But it's not there in Nigeria. What you see in Nigeria is trucks flooding Nigeria road with the goods, and sometimes for you to transport goods from Kano to Lagos, you spend 3 days on road. It does not end up there. It also goes into depleting the roads. It breaks down the tarred road up to the extent that a road manufactured now that is supposed to last 20 years before it starts repair will break down in the shortest possible time of 2 to 3 years because of heavy trucks. Then we look at another key sector, the cost of operating the business. The cost of doing business in Nigeria is too high. It's higher than the cost of doing business in any of the sub-region, if not in the entire African country. And this is why, if you look at the NEPA, the power, you look at the insecurity, you join all these things together, you see the reason why most of the multinationals operating in Nigeria have relocated to other countries within the sub-region. Nigeria has over 200 million people. Anybody manufacturing or producing goods in Nigeria see this place as the best in terms of marketing, in terms of market reach out. But they cannot do it here. They go to small countries around us and produce there and send to us here. We are losing very much in this angle. Then you come to another one that is very, very important, our political system. The political system in Nigeria is denying businesses, is denying the investors their opportunities to invest and sustain their businesses in Nigeria. Reason: some multinationals or big companies that came in to do businesses in Nigeria, some of them cannot be sustained because of the political machination or manipulation here. Politicians will come in, see big businesses, see big organizations that have good track records, they will abandon them and go and establish their own mushroom companies and use those companies to do businesses, to do construction, to do all sorts of things that multinationals and well-established businesses across the globe are doing. So the competition here becomes unhealthy. Very much unhealthy in the sense that the best does not take the job. Then, another situation that political system give us a bad light is that once after the first year and second year in the office, the politicians start preparing for another term. You can see that politics takes 2 years out of the governance. And once it happens like this, they may not even award contract on the second to the last year of their term. The whole energy, money, finance, and everything is channeled how to come back. Therefore, businesses will stay idle until they finish. And those who are lucky to get something when they come back, good. Those who are not lucky may suffer. And no businessman will come
allow me to,
and invest in business.
Okay. I'll allow you land, but let me interject and ask that all of these factors that you've identified are quite notable. But let me ask you that the CBN has been throwing off series of initiatives all to attract investments into this country. FX side and all of that, exports and all. My question would be, what is your assessment of some of these initiatives? Are they yielding the desired fruits?
Well, this is a very interesting angle of this discussion. CBN have been doing its best, but we should always bear in mind that CBN controls the monetary policy, while the government controls the fiscal policy. If the fiscal policy does not match with the monetary policy, whatever you are doing is a waste. And again, CBN, the best thing they should have done for the country would have been to reduce the borrowing rate. Look at what is the MPR today. This MPR in itself is not the borrowing rate. It is the rate in which the bank can get money within themselves. Then they will now add the cost of funds. They will now add the cost of funds, because if they get money, there are some costs. They will add the cost of funds into that. And if the MPR is 18%, the cost of funds could be between 7 to 10%. If you add the 10 to 18, you will see that the lending rate will be 28% or 30%. This is very detrimental to business and to economic activities. An investor that comes to invest in Nigeria cannot borrow money in Nigeria to do his business. An investor that invests the same money in Europe or America can get a fund from bank within 3 to 5% maximum. So if I'm an investor, do I borrow here or do I borrow there? If I should borrow there, why don't I invest there with all the risk I'm going to meet here? So these are some of the problems. Those little palliative that CBN is coming out with, they are good, but there is another question. Look at the custom duty waiver. You look at the tax grant. Look at the dividend payout that attract no tax. This is not something you are telling an investor. He knows all this. Take, for instance, free tax on dividend. It's there. in any country. And this is why people invest in stock. So giving it to any investor as a new thing means that you have been denying them before. And this calls to question another problem that we have, which I wanted to mention: the legal system and the government operations. So they come today and ban this, tomorrow they unban. They come today and say, we give waiver for this. Another year or 2 years, they close the waiver. No investor will come into this type of environment because of this. I'm telling you, because the investors' business search will reveal this. The investors' feasibility studies will reveal all the climatic situation in a country, including all these things that CBN is bringing out this. And they will also look at how sustainable was it in the past. And why was it not working in the past? It's because a government didn't want it to work. What about if another government comes and don't want it to work and stop what this man has done? So all these things, yes, we look at it as very good, but it's also another way to say we cannot go here because this business climate is not sustainable.
All right, then, wrapping up this segment of the show, you've talked about what can be done to help attract more investment. But I'm now asking that. We expect an inauguration in a matter of days now. A new president will take over, and a lot of expectations are there, particularly around the markets and investment drive and all of that. Now, when do you think, following stability of the polity, when do you think that investors' confidence might likely start to return to Nigeria's market, not just the stock market, the entire economy?
Well, Shehu, I would like to say that the incoming administration should look at the economy of this country. This country has great potential in terms of the economy. The buoyancy of this economy is so much, but we are not tapping them. One of the reasons is the type of people that form the cabinet of most of the administrations that come in. My advice to incoming government is to put the round hole in the round peg. I mean, to put the round peg in the round hole in terms of appointment. The previous government, once upon a time, appointed lawyers to man key professional areas of engineering, key professional areas of accounting. I can remember that even up to now, a lawyer is still manning some key sectors of road, of power, of housing, which are purely engineering sector. I remember that once upon a time, a lawyer was in charge of Nigerian budget, minister of budget. What is a lawyer going to do in the budget? Are there no accountants in this country? Or even economists? So these are the major problems, because whoever is coming should think of Nigeria rather than thinking of my people. Because if you think of your people, the thought of your people will take you away from Nigeria, that you come to govern. So that's the key thing. Then, another thing is to look at the power. Like I said, that power sector drives the key. Power sector drives the economy. Power sector gives also the security of lives and property, because criminals operate mostly in the night because there's no light. There's no power to generate light to cover the key areas where criminals are hiding. And there are no security infrastructure. Even ordinary CCTV does not work in Nigeria. But go to Benin Republic, go to Togo, all these countries that we even feed. So everything is working there, but we cannot get it here. Then we look at the way we handle exchange rate. Our exchange rate is handled in non-professional manner. So, Nigeria is a consuming nation. Almost 80 to 90% of what is consumed in this country is imported. And if all these things are imported, you should not allow the rate of Naira to depreciate so low. Because by the time you exchange it to dollar, which is the base rate of importation, the good brought into this country will be too high. And this is the cause of the spiral inflation hitting the country since this administration. Exchange rate has to be managed. Exchange rate has to be controlled. Exchange rate in a country that is consuming mostly from good from outside should not be allowed to the market forces, because the demand for it will always be higher because people go and import outside. But if we are producing here, the demand for the foreign exchange will be lower, thereby having an economic positive effect on the economy. But now, the high rate of dollar and the continual depreciation of Naira hurts the economy. It kills the economy. It gives us unpalatable economic condition. So if government should take this into consideration, I feel that the government will do well. And the government should not come out with a 5-point agenda, 10-point agenda. We don't need it. You already have an agenda. What is your agenda? The agenda is socio-economic agenda that you have. The social contract you have entered with Nigerians. That is your agenda. We don't need to reel out so many agendas that you will not be able to follow.
Prof, it's a good way to leave it. I know it's a very interesting conversation, and we can go on and on. But Professor Philip Gwadeoha, I must thank you, Professor of Accounting, now University of Abuja. There's never enough time to talk about all these issues on television, but we'll definitely revisit it. Thank you so much. Have a great weekend, Prof. Well, up.